Okay, welcome to another bite-sized video from Astranti Financial Training on topics that you're going to encounter in your CIMA exams. And today I want to talk about a certain subject that you're going to discover if you're sitting your BA4 exams. Because if you are, you're going to need to know about internal control and fraud. And one of the things that you're going to need to learn about is your fraud risk assessment. And this is where we introduce the idea of internal control, because internal control really plays an important part in preventing and detecting fraud. And the starting point, the very beginning point for identifying these relevant controls is through fraud risk assessment. And fraud risk assessment helps an organization to identify where a risk of fraud lies, and then to assess the controls that are needed to manage those risks. Now, the assessment can then move on to assess the current controls and whether the current controls are seen as sufficient enough to manage the risks that have been identified. So now let's go and have a look at some fraud risk indicators, because there are three basic ways that fraud can be identified. One of those is dishonesty on behalf of the employee, the opportunity for fraud to occur, and the motivation for the employee to commit fraud. So these are three indicators that suggests fraud could be present. So let's go and have a look now at an bakery, and we'll look for the indicators dishonesty, opportunity, and motivation during our example. So you've decided not to become a management accountant anymore. You've decided the life for you is getting up early and baking bread. Now, you're a trusting kind of person, so you often leave your small business, your bakery, under the supervision of your assistant manager. The assistant manager then has control over the whole shop, doesn't he? And of course, that means they have control over the cash. Now, you haven't put any security measures in place, as well as there being no methodology in place to keep a check on him, because you trust him. You trust him to do his job honestly, and there's never been an issue before, although you are aware of some financial problems that he is having after a recent divorce. So, we can see there's been no security, no methodology, and there is opportunity. Now, can you think back just to 10 seconds ago and tell me some of the three indicators of fraud? Well, you should recognize that opportunity is one of them. And by not having any security and not having any methodology in place, you have given your employees the opportunity to commit fraud. Now, is motivation a problem here? You've been able to trust your assistant manager before, but of course, he's going through divorce, he's got financial problems. He's been honest up to now, but because of external pressures, motivation could become a factor. And what was the third indicator of fraud? Well, that's dishonest. And of course, as we said, so far that hasn't been a problem, but the motivation may push him to become deceitful. So now let's have a look how we can mitigate this risk by looking at fraud risk management, because as we can see, it's not sufficient for a company just to be able to trust their employees, because that gives them the first step in the fraud risk indicator of opportunity. It's vital that a set of controls is always put in place so the chances of fraud are reduced, and even if fraud is committed, then the chances for discovery of that fraud are increased. And this is why companies put fraud risk management policies into place. And they're normally made up of three elements: fraud prevention, fraud detection, and you can see we're going in a line here to fraud response. It needs to be prevented, and if it's not, it needs to be detected, and then you need to respond to the crime. So firstly, let's have a look at fraud prevention. Now, as we've said, controls are a really vital element in preventing fraud from happening in the first place. So let's have a look at some typical controls that businesses put into place. Now, staff supervision, that makes sense, doesn't it? Your baker, your assistant manager was left in sole control of the shop, which gave them more opportunity. If they're supervised, those opportunities are reduced. Of course, then, if payments need to be made, there needs to be a system of approval and authorization, so there's not a culture of just going to help themselves from the till, even if it's a business use. If there's a structure in place, it's more likely fraudsters would be deterred from doing the crime in the first place. Segregation of duties. And this is important because it means that one person doesn't have sole control of every area. Because if they do, again, the crime is easier to hide. If you're making sure that duties are segregated, it would need the collusion of 2 or more members of staff to make it viable. And again, you're reducing the risk. You're preventing the opportunities for it to happen. Then you can look at accounting controls, such as reconciliation. And this is so that if a fraud is committed, it can be easily seen or quickly identified. And then, of course, you need to think about the people you are recruiting. If you've got a strong recruitment process, hopefully you're going to ensure that you're employing trustworthy and loyal staff who've really got strong values of integrity and honesty, no matter how far their external lives push them to another course of action. And then we look at the culture of the business. Does the culture of the business stress importance, integrity, and honesty? If it does, again, it's less likely that someone is going to commit fraud. And then, of course, another way to prevent it is to make sure everyone is clearly aware of what disciplinary procedures you have in place should anyone countenance the idea of carrying out fraud. But another vital policy that needs to be put into place as an essential fraud prevention measure is a fraud policy statement, because this is the kind of statement that establishes the rules for the staff, which clarify the crime will not be tolerated and really tells them what you will do if you find them committing fraud. And in section number 2, we're going to move to fraud detection, because it's actually quite hard to uncover fraud. And so it's really important that any organization has controls in place which aids in the detection of fraud. Now, there are various ways in which these controls can be put into place. Let's go through a quick list of them now. You can have regular checks and reviews of the management accounts, inventory, and assets. So if you're constantly reviewing them, you're obviously going to come across any evidence of fraud much quicker than you would if you didn't provide regular checks. Company officials should also be vigilant. They should be looking for any peculiarities, anything out of the order in the function of their business. Perhaps an employee is acting strangely. Perhaps they're choosing to isolate themselves because the fraudster is guilt-ridden and is afraid of accidentally giving themselves away. But it's down to the management to identify and manage fraud, because external auditors' role is really only to find frauds that are material to the financial statements. But it's worth noting that fraud can be detected by comparing and noting the differences in the information reported by external auditors with the information that has been sourced internally. So here we go. Let's just have a brief run through of that again. Fraud detection. We need to make sure that we pick up any evidence of fraud quickly. One way of doing that is regular checks of management accounts, inventory and assets to make sure that nothing is out of the ordinary, while company officials should also be thinking if the whole business is running smoothly, are employees working okay, and the reason for this is that's the extent. External auditors aren't going to pick up on fraud in that manner, so the only people that are able are the management. But external auditing can be useful when comparing internal information with external. And then once fraud has been detected, that's internal auditors with sourced internally. And then we move on to fraud response. And of course, if fraud has been found, you have to act. And fraud response can even be included in your initial strategy. And basically, it's a framework to show and to plan how the company will respond in the event of fraud being found. And it covers a variety of things, such as who will be investigated, how the disciplinary procedures will be followed, and a way to minimize any public relation fallout. It also facilitates decision making and sets out standard procedures to help the company deal with the fraud in an appropriate manner. Now, the overall objective of risk management strategy is to limit the organization's exposure to fraud. Of course, that makes sense. And why else might they want to reduce their risk of fraud? Well, that's right. They want to minimize financial loss. Can you think of another reason? Well, that's right, because it can have an adverse effect on an organization image and reputation. So these are the three objectives that we are trying to minimize through putting down this plan. Now let's revisit your bakery. Now, unfortunately, I'm sad to tell you this, the assistant manager who you trusted so much has unfortunately been found to have been stealing money from your tills. Now, if you'd had a fraud response plan in place, it would have set out clearly what should have happened. For example, how would the fraud have been investigated and how you should act. Should you terminate his employment or just deliver a warning, or should you even report the matter to the police? So there we go. That's the fraud risk management, and it's 3 stages from prevention to response. And in this 10 or 15 minutes or so, you have learned everything you are going to need to know about this subject for your BA4 exams. And if you've enjoyed the video, please take the time to like it. And if you want any more assistance, if you want any more help to make sure you are as well prepared as you can possibly be, make sure to subscribe to our channel. And thank you very much for watching today's video. I hope you found it useful, I hope you found it interesting, and good luck with your studies. Thank you.